So now let's jump ahead to the subsequent bar, our next bar. Well, what do you know? Okay, after our two down bars that exhibited strength, we now have an up green bar, and it now re-exhibits strength in this market. But now you say, how can it exhibit strength? Because it went up on lower volume. Well, Archimedes explained that, and you need to get Archimedes, and it'll tell you why that it's okay for this bar to be up on lower volume and why it indicates strength. So for right now, I'm just letting you know that this bar, these two bars indicated strength, and this bar confirmed strength. So right now we have a long setup that should continue this particular up move. Okay, we have a setup, but what is your trigger? Where are you going to enter? Where are you going to place your stop? We've already talked about target, but what about a target before we get there? Are there any targets between our ultimate target at 23.6 along the way? And to answer those questions, we start once again getting into the difference between a method and a system. A system is just a technique or group of techniques standing on their own. A method is the combination of the various techniques that are applied within their context. Now see, right now I'm like the friend that I was talking about in the car when I was posted earlier on the blog today. I mean, right now I'm telling you turn left, turn right, turn left at the next light, but where are the bearings? Always having your bearings will always keep you on the right side of the market. So now look at this. As far as the laws of charts and men method goes, let's talk about let's look at a couple of techniques that we've already covered, and I'm giving you for free through a lot of literature and videos. We get here and we see that okay, our footstep technique. It's right here. Price came back, bounced up off our footstep. This is an outside bar. Our outside bar technique falls into play here. Okay, we look down and we see that this bar is supported by operators, and even though it had lower volume, and through our literatures and videos that I've published for free, we know why that the volume indicates and confirms that this is a strong bar. But now these are general techniques. But now, so would I have entered here? Yesterday, did I enter here at the close of this bar? No, I did not. Why didn't I here? Because even though everything looks good right now, according to my method, and my method is based on support and resistance and market balance. And in order to understand market balance, you have to understand what a pivot is and what it means, because a market moves from pivot to pivot, from pivot to pivot. And if you don't know what a pivot is, if you cannot recognize a pivot, you cannot really understand the structure of the market. You can give me any chart of anything, of anywhere, of any time period throughout history, and I will show you pivot after pivot after pivot. That's just truth, people. You can't get around that truth. I don't care what anyone is telling you, because I can show you. They can tell you, but I can show you. I've been showing you. Why are you not playing these pivots? I will never understand. But I digress. My method tells me that, okay, even though we're looking good here, we still have not broken this prior top here. See that? That's the last prior top here. And once again, as far as pivots are concerned, and market balance, the high price, is not the top. The turn signifies the top. The pivot tells you where the top is located. These tails just tell you where the high price is located, but that does not mean that the exact high price is the top. So right now we have a squeeze between this top, and Fibonacci down here. So what breaks the ice here? What would break the ice for us here? Well, a break above this line, the prior top here. I'm in. I'm not waiting for the close because I've got strength, strength, strength. That is 3 strength in a row. Okay, where do I want to get in? As usual, on a pullback to a footstep, preferably a footstep that is located at a support or resistance level. Okay, so I want to get in right back here at the top on the pullback. If it does not pull back, okay, and breaks above this high here, I still get in. Because normally I like to take 2 positions, to be honest. I like to take a position on the break and I like to take a position on the pullback. Okay, but for your purposes here, okay, it's okay to just enter on the pullback here. But if you had stayed in this trade and waited when you got in down here, you were just asking for trouble because there's no confirmation here. Now I can understand if you don't have time to watch the market and you're not trading off the hourly charts, that's different. Okay, but if you can't watch the market, you shouldn't be really looking at the 1 hour anyway. You should be going strictly off the 4 hour and above. Now see here, the safest entry is always going to be on the pullback, and typically, if I enter on the break above here, market makers, market makers, operators, once I enter, they'll pull it back to here anyway just to test. And but if we don't enter, price will typically go ahead and keep on going, and that's by design. We want to keep they want to keep the retail traders out of any good moves. So you can just anticipate that if price was not going to pull back, once you enter, most likely it's going to pull back, and once again you have people trading against you. So just already know that most of the time when you enter, the market is probably going to pull 10 to 20 pips against you just right off rip. That's just right off of GP, because your broker is going after you and see if he can spook you out of your position. It's just that simple. So anyway, my method tells me that any move up should be stalled by this resistance level here, and we see up here we stalled on this bar. This bar didn't quite make it. We have a strong bar here, yet we stalled at this bar. So let's jump ahead and see what happens on the next bar. Now let's jump ahead here to our next bar, and this is our next bar here, and we can see that we closed above resistance here. And this is minor resistance, but resistance nonetheless, and we close here. But now we have a lower volume here, but we want to stay in. Now why do we want to stay in? When we look down here, we see that the operators were responsible for the last up move with strength. The operators are also in on this bar that's crossed above resistance. Now how do we know that the operators are still buying here and not selling here? Well, a good clue is that the bar closed near the high of the bar. If there were selling here in this bar would close near the middle or lower end of the bar. But now why did this bar stop where it did? It went up and stopped here. Why did it stop where it did? Because a top and a bottom is a range. Okay, so when we look here and we see this is the top here, the range of the top is going to be the high of this bar here. So once again, I reiterate, support and resistance is a range. Okay, so it makes sense that the market would stop here and try to come back down and test broken support here. And so I mentioned once again, the method is support and resistance and pivots. That is the method. The techniques are everything else: the Fibonacci, daily range, opening range, volume, MFI. These are all techniques that are applied within the method. Now see, I entered on the break above this bar. Even though I expected the market to stop here, and my stop is below here because this is where the operators entered. This is also a prior top, so, and we're also above this minor resistance level here. So on the way back down, we have 3 levels of support protecting our stop if we place our stop below this operator bar here. And also, if we're not in yet, we can get back in on the pullback to this broken its support. Now on the way up it was